Hi everyone, it's Femi here, and in this video I'm going to be talking about the 5 best indicators that you can use for your technical analysis even as a beginner. Now these 5 technical indicators are not just any indicators, these are some of the best indicators that you can use to spot profitable trades, and I also apply them in my own technical analysis sometimes. And in this video I'll break down each indicator for you, and I'll also show you exactly how to use them, and most importantly I'll show you how to combine them for a better technical analysis on your chart. So whether you're a beginner or you are new to crypto trading, or maybe you're an experienced crypto trader, these 5 indicators I'll be talking about in this video will help you make more informed trading decisions. So make sure you watch this video to the end so that you don't miss any important information, because I'll be sharing a lot in this video. Now the first technical indicator that we advise to use as a beginner on your chart is moving average, or MA. Now, before I go ahead and show you how to use moving average indicator on your chart, let me explain what moving average indicator is all about. Now, you see, when you're talking about the moving average indicator, it stands out as one of the most reliable and widely used indicators in crypto trading and even in forex trading. Now, the MA indicator helps you to identify market trends, and it also helps to show you any potential price direction on the chart. So that is what the MA indicator is all about. So right now I'll go to my screen to show you exactly how you can use the moving average indicator on your chart. Now, as you can see on the screen, this is the home page of the TradingView platform, and this is where I do all of my technical analysis. Now, in case you don't have an account on TradingView, you can use my referral link, which will be in the description of this video, to create an account on TradingView. Now, let's go straight to how you can put in your moving average indicator on your chart to do your analysis. Now, the first thing you want to do is to search for the cryptocurrency you want to trade or that you want to do your analysis on. And for you to do that, you come here to the top of the screen where you have the search bar, you click on it, and then you search for the cryptocurrency you want to trade. Now, make sure that it is on crypto right here. Make sure you've selected crypto right here. So I'll just come here. Let's say I want to trade, let's say BTC USDT. I'll just click on BTC USDT right there. But let's say, for example, you want to do futures trading. If you want to do futures trading or trade perpetual contract, just put in point P right there, or dot P. You can put it right there. So once you put it, you know you are trading perpetual contract. And then once you've done that, the next thing you want to do is to click on where you have this all sources. Where you have these all sources, click on it, and then you come to this search bar and search for the app that you want to use to trade. So if you want to use Binance to trade, search for Binance right there. If it's Bybit, search for Bybit right there. So for me, let's say I want to trade with Bybit, I'll just enter Bybit right there, and then I'll click on Bybit. And then once you've done that, the first pair you see on the list is what you are trading, or is what you want to do your analysis on. So you can see BTC USDT.P, that's BTC USDT perpetual contract, and it is on Bybit. So that's it, and then just click on it. So once you've clicked on it, just come right here to where you have see on super chart, and then it will bring you straight to the chart for that trading pair. Now the next thing is, how do you add your moving average indicator? Now to add your moving average indicator, come here to where you have indicators at the top of the screen, just click on it, and then you come here to this search bar and search for that indicator. So for this one, it is moving average. I'll just search for moving average right there. So once you enter moving average, you see the different moving average indicators you have. You have moving average exponential, you have moving average simple. So for me, I always prefer the moving average simple. So I'll just click on moving average simple right here. So once you click it once, you see the blue line on your chart. So you can see this blue line on our chart. So it was when I clicked on this moving average simple that this blue line came on the screen. Now for the moving average indicator, it's always advisable to have at least 2 lines on the chart, 2 moving average lines on the chart. So if you want to have more than one, maybe if you want to have 2, just click on this moving average simple one more time. So if I click it one more time, we have 2 moving average indicators on the chart. Now how do I know that? You see where you have this drop down. You see where you have this drop down, you see you have 2. So that means that you have 2 indicators on your chart. So again, we have 2 moving average indicators on this chart. So once you have that, just click on this X to take it away. And then you now come here to where you have this drop down, or where you have this 2, just click on it. And then right here, you can see we have 2 indicators. The first one is SMA9 and the second one is SMA9, which means they are the same indicators. So that means that you need to edit it and put in the one you prefer. Now for you to edit this first one, you just come here to where you have the settings, just click on this settings right here. And I see where you have this 9. Now, what's the meaning of this 9? Now, this 9 here means that this moving average indicator is a 9-day moving average indicator. It means that it is measuring or calculating the average price of that cryptocurrency every 9 days. I hope you understand. That's just the meaning. So for me, I always prefer to use 50 and 200. That's for both indicators. So for this first one, I'll change it to 50. And then once I change it to 50 right here, I'll click on OK. And then I'll come back here to where you have the second one. I'll click on this settings again, and then I'll change it to 200. That means that this first one, this SMA 50, is a 50-day moving average indicator, and the second one, which is SMA 200, is a 200-day moving average indicator. That's just the meaning. And in case you want to differentiate between the two, you can also change the color. So let's, for example, I want to change the color of this second one to, let's say, yellow. So let's say this SMA 200, if I want to change it to yellow, click on settings again, and then you come here to where you have style, and you see the color right here. So let's say I want to change the color to yellow. Let me just leave it, or let's say let me put it as red so that it can be visible. Okay, let's put it as red. And then once you've done that, click on OK. So you can see we have two lines on the chart. We have one blue line and we have one red line. Now the blue line is the 50-day moving average indicator, and the red line is the 200-day moving average indicator. You need to take note of that. So now that you have the indicator on the chart, how do you now use this indicator to make a decision when you are trading? Now, before I go ahead and show you how to use the indicator to make a decision, some of you might want to ask me that, why did I select 50 and 200? Why did I not select any other number? Now, the 50-day moving average indicator shows you a short-term or intermediate price movement of the market, or for BTC, which is actually what we are trading. But for 200-day moving average, it's showing you a long-term trend of the market. So the 50-day is showing you like maybe a short-term and an intermediate length price movement of that market, or maybe the trend in the market, and the 200-day moving average is showing you for the long term. So it means that you're combining both short term and long term to make a decision for yourself. That's what I always prefer, because combining a 50-day trend and a 200-day trend together can give you a more concrete decision when you're trading, and that is what I always use whenever I'm using the moving average indicator. So again, how do you now use this indicator or these two lines to make a decision? Now the first line right here, which is the blue line, is called the short-term moving average line, and the red line right here, which is the second one, is called the long-term moving average line. Why is that? Because the blue line is representing a shorter time, which is 50-day, and the red one is representing a longer time, which is 200-day. That's why it's called short-term moving average line and long-term moving average line. Now the signal from this indicator is that whenever the short-term moving average line is above the long-term moving average line, it means that you have a strong buying opportunity, or maybe it is indicating an uptrend. That is just the meaning. And the second signal from this is that whenever the long-term moving average line is above the short-term moving average line, then it means that it is showing you a strong selling opportunity, or maybe it is indicating a downtrend. That is just the meaning. Now let's look at what I'm saying. Now if you look at somewhere at this point right here, you can see where my cursor is. So let me just make it big so you can see. If you look at somewhere at this point, you can see that at this point the blue line came above the red line. You can see maybe from this point the red line was above, but when it got to this point, the red line came down and then the blue line went up. And don't forget, I said when the short-term moving average line is above the long-term moving average line, then it is indicating a strong buying position or an uptrend. And if you notice from this point right here, even though the market came down to this point, from this point it went back up, and it has been going up from this point. So you can see that from this buying opportunity that it was showing right here, maybe if you bought around anywhere around this point right here, then it means that at this point you should be in profit, or maybe anywhere around this point you should have taken your profit. That's just the meaning. So it is showing you a strong buying opportunity, or it is indicating an uptrend. That is just the meaning. Let's look at another example. Let me just take you through another example. Now you can see at this point right here, you can see that the blue line came above the red line. Don't forget, again, the blue line is still the short-term moving average line, and the red line is the long-term moving average line. Now when the blue line is above, that's showing you an uptrend or a strong buying opportunity again. So you can see at this point when the blue line came up, if you bought right here, or maybe if you check this indicator and you can see that okay, it is a good time to buy, and you bought it, you can see that it started going up from this point, and I don't think it came down again. You can see it started going up, really up, even until this point. So you can see that that's another indication showing you that the moving average indicator shows you an uptrend or a downtrend, or maybe where you can buy or where you can sell. And again, let's check another example again just before we go to another one. Let's look at a downtrend. We'll be looking at uptrends. Now you can see at this point right here, the blue line came below the red line. Now the blue line is short-term line, and then the red line is the long-term line. And don't forget, I said that when the short-term line is below the long-term line, it means that you have a selling opportunity, or maybe you have a downtrend. So you can see that from this point right here, the market really went down, and then it went down up to this point right here. So that means that if you bought at this point, you could have taken some profit around anywhere around this part right here. I hope you understand. And lastly, this is another example right here. You can see this is another one. The blue line came above the red line and it's showing us a buying opportunity or an uptrend, and then it eventually went up. So this is how you can use the moving average indicator to check whenever you have an uptrend or maybe a downtrend, or maybe whenever you have a good buying opportunity or a good selling opportunity. I hope you understand. But before I go to the next indicator, I want to say something that please don't always rely on just a single indicator. Please always make sure that you are combining other indicators to make a decision whenever you are trading. Using indicators can make you profitable, but please always make sure you are combining other indicators if you want to use indicators to trade. So that's the first indicator in this video, and this is one of the best indicators I always advise a lot of beginners to start with. Now let's get into the second one. Now the second technical indicator that you can use on your chart is Relative Strength Index, or RSI. Now for me, the RSI indicator is one of the best and most trusted technical indicators for identifying potential market reversals through overbought and oversold conditions. Now before I go ahead and show you how to use this technical indicator, what exactly do I mean by overbought and oversold conditions? Now when we talk about overbought and oversold conditions in crypto trading, think of it like this. Now you see, when the price of an asset moves too far in one direction too quickly, it will most likely lead to a correction in the opposite direction. So let me give you an example. Now in an overbought condition, it means that the price of a coin or the price of a crypto has gone up rapidly to a position where it might be due for a pullback. That's just the meaning. And this usually happens when there is excessive buying pressure on a coin that's pushing the price of that coin higher than what it should be in the short term. So that is what it means when you have an overbought condition. So overbought condition, from the word overbought, it means it has been overbought. I hope you get it. Now on the other hand, an oversold condition occurs when the price of a coin has fallen sharply and it might be due for a bounce back to the other direction. Now this typically happens when there is heavy selling pressure that pushes the price of that coin lower than what it should be. So now that you understand what I mean by overbought and oversold conditions, I'm going to go to my screen right now and show you how to use the RSI indicator. Now to put in your RSI indicator on your chart, you come here again to where you have indicators. Just click on indicators right there, and then you search for RSI. So let me just put in RSI right there. Now RSI means Relative Strength Index. That's the meaning of RSI. So if you want to put it on your chart, just click on it. So once you click on it, it'll be on your chart, and then you click on this X right here, and then you can see right here that you have two lines. You have a blue line and then you have a yellow line. Now the blue line is your RSI indicator. The yellow line is just like a moving average that is on your RSI indicator. So if you want to remove that moving average, you can remove it. What you just need to do is just click on settings right here, or what you just need to do is just come here to these three lines, click these three lines, and then click on settings at the bottom of the screen. And then you can see where you have this RSI based MA. Just click on it and it will remove it. So the blue line or the purple line is your RSI indicator that you need to be watching. So this is the RSI indicator right here. Now for this RSI indicator, it ranges from 0 to 100. So you can see at the right side of the screen, you have from 0 to 100. So how do you determine, or how do you know what its value means? Maybe if it's on 10, if it's on 20, if it's on 100. What's the meaning when you are using RSI indicator? Now, whenever your RSI is between 0 to 30, it means that that market or that pair is oversold. That's the meaning. It is showing you an oversold condition. And anytime you have an oversold condition, it means that it is a good buying opportunity. Don't forget, when your RSI is between 0 to 30, that means that it is showing you an oversold condition, which means it is a good buying opportunity. That's one. Now, whenever it's between 70 to 100, that means that it is showing you an overbought condition. And for overbought condition, that means that it is a good selling opportunity. Please understand the difference. I said for 0 to 30, it is a good buying opportunity. For 70 to 100, it is a good selling opportunity. Now, what do I mean by that? Now, you can see right here, you have 0 is from the bottom right here to where you have this line. You can see this middle line, this line right here, that's where you have 30. So if your RSI line is between this area, that means that it is a good time to buy that coin. And then if you come here to where you have 70 to 100 at the top, it means that it is a good time to sell that coin. That's just the meaning. So if you have your indicator right there, then you can go ahead and make that decision. But if your RSI indicator is showing you between 30 to 70, that means that you don't need to make any decision. It is not showing you whether it is overbought or oversold. So it is still an average condition in the market. So you can decide not to do anything at that point. And you can even see an example right here. You can see at this point, let me just show you an example. Now you can see at this point right here, it was on 80. This point right here, the RSI was on 80. And 80 means that that's a good selling opportunity. So if maybe you bought at this point and you sold, you could have made some little profit because that's it right here on the chart. This is the point on the chart. So for example, if you sold at this point, or maybe you decided to short at this point, you can see it came down a little bit. And from that point, it went up again to this point, and then it came down again to this point. So maybe if you bought at this point, you could have made some profit here, or maybe you bought at this point, you could have made some profit right here. So you can see right there, your indicator will show you whether it is a good buying opportunity or a good selling opportunity right there. Don't forget, I said it ranges between 0 to 100. 0 to 30 is for a good buying opportunity, and 70 to 100 is for a good selling opportunity. Now, before I go to the next thing, I want to give you like an advice if you want to be using this RSI indicator. Now, for this RSI indicator, it's always advisable not to use it during strong market trends. That is, maybe when the market is in a strong bullish trend or maybe a strong bearish trend. Please don't use the RSI indicator. Now, what I mean by strong bullish trend and strong bearish trend is that for strong bearish trend, it means that the market is really going down. Maybe the market is just going down. It is not even going maybe up and down. It is just going down for so many hours or maybe for so many days. Don't use it. That's strong bearish trend. Now, for strong bullish trend, it means that the market is just going up. The market is not even coming down at all. It is just going up. Then don't use this indicator in that kind of condition. Use it only when the market is going up and down, when the market is ranging. That's just the meaning. Or maybe when the market is in a sideways trend. That's the meaning. So please don't use it when it is in a strong bullish or bearish trend. So that's for the second indicator. Now, before I go to the third technical indicator, I just want to say that about 64% of you watch my videos haven't subscribed to the YouTube channel. So please, if you are learning something valuable from this video, or maybe you found any of my previous videos useful, please subscribe to the YouTube channel. We are trying to hit 200,000 subscribers very soon. And please don't forget to like the video. Thank you. Now, the third technical indicator to use on your chart is the MACD indicator, or the moving average convergence divergence indicator. Now, you see, the MACD indicator is one of my favorite indicators to use, and if you are my student, then you already know that I love to use this indicator a lot. Now, the MACD indicator is used for confirming trend changes and is also used for identifying potential market reversals. Now, when you're analyzing the chart with this indicator, it is important to check for something called crossovers. Now, these crossovers can happen between the MACD line and the signal line, and I'm going to show you how to do that on the chart. So I'll go to my screen right now and I will show you how to use the MACD indicator. Now, to put in the MACD indicator on the chart, just come again to where you have these indicators, click on it, and then search for MACD. So MACD, that's your MACD indicator. So you see it right here, moving average convergence divergence. So I'll click on it. And like I can see right here, it's already showing at the bottom of the chart. So just click on X and remove this. So this is your MACD indicator right here. Now, on this MACD indicator, you have two lines again. Now, these two lines, one of them is called the MACD line and one of them is called the signal line. And then you have this histogram. This histogram is where you have these rectangles, these red and green rectangles right here. They are called the histogram, the MACD histogram. But let me explain the difference between the MACD line and the signal line, and which one is the MACD line, which one is the signal line. Now, I always like to use this simple illustration to explain it. Now, you can see, let's take this area, for example, where you have these green rectangles. Whatever line you have at the top is your MACD line. That's the meaning. So your MACD line right here is the blue line, and whatever line you have at the bottom is your signal line. So the yellow line right here is the signal line. So that is just the simple way I always advise beginners to separate between the MACD line and the signal line. So that means that on this chart, our blue line, this blue line right here, is the MACD line, and then the yellow line is called the signal line. So that's the first thing you need to understand about this indicator. That's the first thing. Now, how do you now use this indicator to determine whether you want to buy or whether the market is going off or whether you have a good buying opportunity or a good selling opportunity? Now, for this indicator, whenever the MACD line is above the signal line, it means that it is showing you a buying opportunity, or maybe it is indicating an uptrend. That is just the meaning. And the second signal is that whenever the signal line is above the MACD line, it is showing you a selling opportunity or it is indicating a downtrend. That is just the meaning. And let me give you like some examples. Let's just go back and let me give you some examples. Now, you can see at this point right here, the blue line came below the yellow line, which means that the MACD line is below the signal line. So for this one, it means that it is a good selling opportunity. And you can see from the chart, the market moved from here to this bottom right here, and this is like within maybe 6 hours or 7 hours, because this is a 1 hour time frame. So you have like 3 or 7 candlesticks right here. So that means that within 3 hours, 4 hours, you should have made some profit. If you are doing futures trading and you are using leverage, if you are using a high leverage, you should have a reasonable amount of profit from this point to this point right here. That's another one. And you can see from this point again, the blue line now came above the yellow line. And don't forget, I said when the blue line or the MACD line is above the signal line, that's a good buying opportunity. So you can see from this chart right here, if you entered at this point from your indicator, if you entered here, you can see that you would have made some profit up to this point. And you could have even taken some profit at this point if you are using a high leverage with futures trading. So that's how you can use the MACD indicator. And you can see there are so many other examples that I can point out right here. This is another one right here. At this point, the blue line came above the, let me make it big. So at this point right here, the blue line came above the yellow line, which is a good buying opportunity. And you can see at this point, the market also went up. Let me make it big so you can see. Some of you are not seeing this well. So you can see right here, the market went up from this point to this point. So it will be showing you whether the market is going in an uptrend or downtrend, or maybe whether it's a good buying opportunity or a good selling opportunity. Don't forget, when the MACD line is above the signal line, is a good buying opportunity, and when the signal line is above the MACD line, is a good selling opportunity. So please take note of that. Now, the fourth technical indicator to use on your chart is the Bollinger Band. Now, you see, the Bollinger Band indicator serves as a tool or an indicator for understanding market volatility, and it's also used for identifying potential price breakouts. Now, what do I mean by this? Now, you can use this indicator to know when there is high volatility in the market, and you can use it to know when there is low volatility in the market. Now, what is high volatility and low volatility? Now, high volatility means that the coin is actually moving fast in whatever direction it is moving, and low volatility means that it is just moving slowly. That's just the difference. So this indicator will allow you to know when there's high volatility and when there is low volatility. And again, it also allows you to know when there will be a breakout. So when there will be a breakout, whether on the upside or on the downside, you get to know with this indicator. So I'll go to my screen right now and I'll show you how to use the Bollinger Band indicator. Now, to put in Bollinger Band on the chart, just come again to where you have indicators, click on it, and then search for Bollinger Band. So I'll just search for Bollinger Band right there. So you can see this is where you have Bollinger Band. So just click on it, and once you click on it, you have it on your chart. So this is the Bollinger Band. So let me click on X and take it away. So you can see this is the band on the chart. Now, the first thing to take note of this band is that you have 3 lines. Now you can see you have the first line at the top, you have the second line in the middle, and you have the third line at the bottom. Now, the first one at the top is called the upper band. This first line at the top is called the upper band. The one in the middle is called the moving average line. And then the one at the bottom is called the lower band. So you have upper band, moving average line, and you have the lower band. Now, how do you use these lines or this indicator to determine what is happening in the market? Now, the first thing to take note of is that whenever the price is touching the upper band, it means that it is showing you an overbought condition. And don't forget, overbought condition means that it is a good selling opportunity. So right here, let me just give you an example. So this is an immediate example right here. So you can see the market was touching the upper band at this point. So you can see it was touching it at this point. And then when it got to this point right here, it started selling. So you can see the market really came down from this point right here after touching the upper band. And another example is this point right here. So you can see the candlesticks or the price came to touch the upper band at this point, and then from this point it really came down. So it is a good selling opportunity. So if you are doing futures trading, you can use all of these opportunities to short. And another one right here, you can see it came to touch the upper band again right here, and then it really came down. So if you are shorting BTC USDT from this point right here that I've shown you, then you should be making some profit for yourself. So that's the first signal you will get from this indicator. Now, the second signal is that whenever the price is touching the lower band, it means that it is showing you an oversold condition, and an oversold condition is showing you a good buying opportunity. So if you look at this example right here again, this is another example. It came to touch the lower band. So when it came to touch this lower band right here, you can see it started going up. So it means that if you long BTC USDT from this point, you've made profit for yourself. Another example is this point. So you can see from this point right here, it came to touch the lower band, which means that it's showing you a good buying opportunity. So if you bought at this point, or maybe you longed BTC USDT right here, then you should have some profit up to this point. So you can see that this indicator is a very good indicator that you can use to trade. So that's how you can use the Bollinger Band to trade or to make some decisions when you are doing your technical analysis. Now, the fifth indicator to use on your chart is the volume indicator. Now, the volume indicator is a very simple indicator to use. Now, from the name of this indicator, you should know that it serves as a tool to help you understand when there is high trading volume or when there is low trading volume in the market. Now, when you observe that there is high trading volume from the volume indicator that is happening on a side of the price movement, then it serves as a strong confirmation of the current trend of that coin. So let me explain. So what this means is that let's assume that the market is going on an uptrend and the volume indicator is showing you that there's high volume in the market right now. Then it means that it is confirming that the market will continue to move in that uptrend. That's the meaning of that volume indicator. And when you see a low volume in a trend, it is showing you an early warning sign of a potential trend reversal. That means that there might be a reversal very soon. So that's what the volume indicator is used for. So I'll also go to my screen right now and show you how to use the volume indicator. Now, to put in your volume indicator on the chart, just come again to where you have indicators, click on it, and then you come here and you search for volume. So I'll just search for volume right there. So when you search for volume, so you can see this is the volume indicator. So I'll just click on it. And once you click on it, it will be showing at the bottom of your chart. So this is a volume indicator right here. So let me just make it big. So you can see where you have these rectangles, this red and green rectangles. That's where you have your volume indicator. Now, the only thing the volume indicator is showing you, where you have high trading volume and where you have low trading volume in the market. That's the only thing you are getting from this volume indicator. So for example, anytime you have like a very high volume indicator on the chart right there, it means that it is showing you a confirmation of that trend. So let me give you an example. So for this point where you're having a very long green volume indicator right here, so this means that it is showing you a confirmed uptrend indicator right here. That's the meaning. It's showing you a confirmed uptrend in the market. And you can see anytime you have like a very long red indicator, that means it's showing you a confirmed downtrend indicator. That's the meaning. So you can see for this indicator right here, start going up from this point up to this point. And if you look at this one, this red one right here too, it started coming down from this point down to this point. So when you have like a very strong volume indicator, whether green or red, it is showing you a confirmation of that trend. So if it is a green indicator, that means that it is showing you a confirmed uptrend. And if it's a red indicator, that means it's showing you a confirmed downtrend. That's just the meaning. So now that you understand these 5 technical indicators, my advice to you is that please don't use one single indicator to make your trading decisions. What I always advise people to do is to always combine 2 or 3 indicators together to make a better and confirmed trading decision. So for example, let's assume that I'm using the RSI indicator on my chart right now, and maybe the RSI indicator is showing me an oversold condition, which is a signal for a good buying opportunity. Now, what I will do is to check if the MACD is showing me a potential reversal to the upside. And I might also check the volume indicator to see if the volume is actually increasing. And if these 3 things are showing me all of the things I've said right now, then I can go ahead and take that trade. But let's assume that you want to take it a step further. You can decide not to use technical indicators alone. You can combine 3 or 2 technical indicators with something like price action. It is always very good when you combine indicators and price action together, because that is what I do, and that's one of the things I teach in my complete crypto trading course. And in case you want to get the course, the link to get it is in the description below. Now remember guys, these indicators are not some magic tools that will guarantee you profit. Please, they are not like that. They are only indicators or tools that can help you to make more informed decisions when you are trading. So make sure you take note of this. Now, in case you want to see how you can learn crypto trading and become profitable very fast as a beginner, click on the video showing right here. And in case you want to learn about the 10 reasons why you might not be a profitable crypto trader right now, click on the video showing right here. Thank you for watching this video. I'll see you in the next one. Bye.